So on the YouTube, like I said, we had that video that we created, right? With what do you struggle with the most, and the number one, at least top commented answer or most liked answer I saw was entries and exits, right? So I'm gonna give you guys a little bit of kind of like a tip on how you can do that better, right? How you can time entries and exits perhaps a little bit better, right? Now listen, what I'm gonna show you here, right? What I'm gonna show you here, there's a couple of different things. I'll say maybe the first one will focus on like the really, really simplistic side of things, like support and resistance. The next one that we'll talk about is using indicators, right? So I think what I'll probably do with you guys and how we'll focus on this is we'll use the RSI. And then because some of you guys are familiar with it because we did that video recently, I'll also do the ADX/DMI indicator as well. Okay. So we're going to start on DJT, all right, because this is a recent trade that a lot of people got to witness live on the YouTube. And so this is just going to be a really good lesson. So how can I time entries and exits better? So let's focus on the first part of that, how to time entries better. So the first way I'm going to show you guys, or way that you can potentially use this analysis to identify ways to do this, all right, is simply just using support and resistance. All right. Now, I never really used these very often before. But since the YouTube thing has grown so much, and since we have so many people kind of following along on like a day-to-day basis, just with the stocks and whatnot, right? Because nothing said here is financial advice. It's all just educational content, right? And one of the things that I've, kind of grown to notice is people love visual helpers, right? People love having something visually to see that can kind of help guide them, right? So what I've started doing, right, you guys saw it on DJT. We did it on GME. We've done it with LPSN, SYM, like a couple of different stocks that we'll get into, and I'll explain more. But I've started drawing like colored boxes, right? And this is not something that's like incredibly like, this isn't thought-provoking stuff, right? Like we're not sitting here going like, oh my God, my brain's exploding from all of this Jackieism. Oh my God, he told me about support and resistance. Holy cow, I'm fucking rich now. Like that's not it, right? The reason that I draw these boxes and stuff on here, right, is to visually help people understand support and resistance and how you can use that to time entries, right? So with regards to DJT, right? So DJT, when we were watching this prior to this trade that we put on, right? Me and my multiple personalities. Prior to that trade that we put on, it was trading at about here, and somebody was asking, how can you time an entry on this thing if you're looking for an opportunity to long this, right? And so I explain in the most simplistic way that you just look over to the left. Because the left has all prior price action, right? Not to be confused with the liberal lefties. Oh, no. But looking left on the chart, right? And the left side of the chart has all of the old information, right? The highs and the lows, and the highs and the lows, and the highs and the lows, and the resistance and the support, and the resistance and the right? And when DJT started to really break down and start trending lower and lower, right, it was just common sense at that stage that when DJT had broken this prior low, where we had seen the stock kind of consolidate pretty nicely multiple times, right? Once it had broken that low, it was common sense that we were going to target this level down here, right? And so I drew a big fucking green box. Green, right? In most people's brains, they think good, right? Good associated with support. So if I draw the box and I make it green, people will assume, right, that the box being green, that probably constitutes support, right? So looking at how can I get better entries, right? So going to circle this all back around, right? How can I get better entries? The number one thing, in my opinion, is simply identifying the clearest areas of both support and resistance. Every single trade that I have ever taken in my career has essentially focused purely on support and resistance. Obviously, a combination of a whole slew of other things. But the crux of my entries and exits are almost solely focused on supports and resistances. And so I always look left. And when I see price pause at a very clear level, and then I see recent price action hesitate and pause at that very same level as well, then I will then once again go into TradingView on the brush section here, hit the fucking rectangle thing, and I'll just encapsulate, some chunk of price action that is roughly about where support is, right? And I draw it across there. And those areas give you clearly defined areas of both support and resistance. Right? Very clearly defined areas of both support and resistance. So you can see that when DJT started dumping and it first and foremost hit the green supportive box, we identified, okay, the stock is now at a potential entry zone. Why is it an entry zone? It is support. Fundamentally, stocks very rarely will just blast through fucking support. It's just not really a thing that happens. Oftentimes, what will happen is stocks will go to those supportive levels, and sometimes they will wick underneath them. In the same thing on the opposite side, where in resistance, oftentimes price will wick above the resistance box, but come back inside and go down. Why does this happen? Because like most traders, right, they are very simple creatures. They draw these little boxes too, but guess what they do, chat? They draw their entry here and they put their exit at the bottom of the box. Some of them are smart enough to put it a little bit lower, but that's their trade, right? That's what their trade looks like. And you want to know why their trade is a loser? Because the computers are smarter than us, unfortunately. And they recognize that there are thousands of orders that have stop losses right there. So why wouldn't the computer then be smart enough to dig through those stop losses, kill those trades, take that liquidity, and then push the stock up from support? So if you are trying to find better entries, fundamentally, the first thing that starts with is finding and identifying support and resistance and drawing boxes around it to make your life a little bit easier. The next fundamental thing that happens is buying the candles that look scary in those moments. Dude, you're crazy if you don't think when we were looking at a potential trade on DJT, you're crazy to think that that didn't spook people. You're crazy to think that that candle didn't spook people. Dude, you blew through the green box of support that we drew. That was the lowest low that we had seen on the stock. You blew right through it. Of course that was going to spook people out. But guess what? That's the trade. That's the trade. When it looks the most grim, and everybody is panicking and everybody's freaking out and everybody's scared, right? If the stock is at support or slightly below it, think about the macro. Is that candle potentially a wick on a larger time frame? Well, what if the stock bounces from here and then that candle that happened on a Monday turns into a weekly wick on the candle, and suddenly you see a weekly candle wick into that low and explode off of that? Wow, is that a bullish candle? Guess what fucking happened, chat? Now you guys are going to see that this stupid motherfucker exploded. Right? Now, beyond the fact that it exploded, look at the weekly candle that happened last week, or 2 weeks ago, sorry, when it wicked into our green zone. Look at that. Most people would see that and they'd say, holy fuck, is that bullish? That thing dipped into support, grabbed all that liquidity, and then held all the way back up here. So you're telling me that this thing wicked into liquidity and then bounced 26%? How is that not bullish? Especially on a stock like this. But that's just it. While everybody was afraid to buy here or buy on the next day when it started underneath that, right? Other people said, well, I want to buy that because listen, you guys want better entries? This is the key. Because when you take those entries on those spooky fucking lows, right? You go into your broker because you're smart, right? And you're not dumb, right? You go into your broker and then you set your stop loss. As soon as you buy the motherfucker, you got to go in and you got to set the stop loss. Don't be dumb. But if you bought those low, scary candles that wicked underneath support, now at the time we didn't know that it was going to bounce. There was no guarantee. But if you bought those scary candles, right, your stop loss, right, most people when they are trying to time potential swing trades, right, they'll give themselves about a 5 to a 10% buffer, right? So I like for my examples just to show you guys 10%, right? I like to just show you the wider one. But in this scenario too, right, you could have done a 5% stop and you wouldn't have been stopped out, right? You wouldn't have been stopped out. But most people, right, would give themselves 10%, especially if you're just trading simple common shares, right? So if you gave yourself 10% on that trade and you smartly set your stop loss at your 10 whatever, right, 1090, right? If that stock had just completely exited the chat, you're stopped out instantly and you lost the 10%. But if you are right, not only did you catch the algorithmic stop loss hunt, you bought it. And if you time that entry, buying those scary candles at support, that can lead to a trade like this, where the stock goes up from those lows, fucking 100%. You doubled your money. Congratulations. You doubled your money in what? How many days did this take? I already forgot. That took a little over 2 weeks. A little over 2 weeks. And you doubled your money. Is there a single person that is pissed off about doubling their money? I don't think so. I don't think so. So if you're looking to time better entries from a risk and a reward perspective, you want to buy those scary candles that happen at or slightly below support and or resistance, right? If you're trying to go short, the same concept applies, right? The same concept applies when being short, right? I can show you guys that with an example on Tesla because Tesla was a fantastic short that we just completed. Or I should say we as in me and my multiple personalities, and I just personally cut this trade. Right, so let me explain. Now, you can already see on the chart that I've got it drawn on there for you. So I'm just going to clear some of this out here so that we've got space here. All right. So a couple things. First of all, we identified a macro area of support and resistance. We identified this because we noticed that the stock had rejected here and dumped, rejected here and dumped, rejected here and dumped. Rejected here and dumped. A little bit higher than it, but regardless. Rejected here and dumped. And then back over here, it was supportive bounce rip, supportive bounce rip, supportive bounce lost, and then it became resistance, right? But that area was a clearly defined area, both support and resistance. And we knew on a macro scale it was. So I drew a red box above that white trend line where that resistance was, right? I drew a red box here. And I said, that red box is resistance. And then I said, there's a harmonic that has completed at that level. And I said, the other common sense thing is to simply look over to the left. And looking over to the left immediately, we identified this wick high and we identified the candles here. And we have identified that Tesla on the macro has made a lower high, or excuse me, a high, a lower high, a lower high, a lower high, a lower high, if it stopped there. And so in that moment, we identified, okay, a couple things. That's a high, that's resistance, that's a harmonic, and that looks gross. So any entry within that red box or on that white trend line with a stop loss above that prior high makes common sense. Why does it make common sense? You've got the harmonic completion, you've got the stock at resistance, you've drawn your red box, you've seen the stock make 4 consecutive lower highs, right? And everybody and their sister was telling you how bullish Tesla was because Tesla over the last few weeks had at that time gone up 28%, and it looked like it wasn't going to stop. But this goes back to the concept of buying scary candles and targeting those entries because we knew that this was resistance. Do we have a reason to short? Yes, it's at resistance. Do we have a clearly defined strategy to enter and exit this trade? Yes. Our exit and risk is the top of this prior high. Our full profit target is the 382 off of the harmonic completion. And the prior areas of resistance right here. That's our exit. And then we watched it wicked into that zone, right, with this candle here. And then it did it again here, right? 2 scary candles. It's going to break out. It's going to break out. Look how bullish it is. Oh my God. And then it craters. Not only does it crater, now we didn't get the 382 profit target yet, just FYI, but let me explain something. Remember how I just explained that the profit target is the prior resistance? This is resistance right here. This is it. Rejected, dumped, rejected, dumped, rejected, dumped. Finally broke through, huge move. Come back and back test it. Look at what we just did. Green box, supportive. Red box, resistive. Green support, red resist. Green good, red bad. And you see how all I'm doing is literally drawing fucking stupid idiot boxes? This was a red box until we broke above it here, and then it becomes a green box because now we're trying to turn resistance into support. And look at what has happened with Tesla since hitting that fucking green box. You see how simple you can make it? Fuck the harmonic, fuck divergences, fuck chart patterns. Bro, I literally just draw boxes. I'm like a fucking kindergartner. I just draw boxes. And it goes to the box and I'm like, okay, if it goes outside of the box, I'm going to short the shit out of it. And then the next time it happened, I was like, okay, well, I don't want it to go outside the box this time. So I'll put my stop loss outside of it, 10%. And then I'll put my profit target where it always has been. And then it goes there, and then you lock in profit, which is what I did today. Literally right at the fucking bottom. It's not coincidence that these things keep happening. It's just common sense trading. And I know that people struggle with like, okay, you know, like that was only 10%. Like that can't be worth that much, right? Bros, the contracts on these were $3,000. I sold them for $4,300. When we had the long trade that we entered right here, that was another $3,000 that we made. That paid for the entirety of the Tesla trade. And now I walked away from this thing $4,300 richer. And did it make a massive move? Not really. 10%? Really? But it worked. And because it worked and because I was smarter than the market makers, I took advantage of it. So timing entries and exits can quite literally be as simple as drawing boxes. You guys love GameStop. You guys love GameStop. I know this. I know the large majority of my followers are GameStop guys, right? Well, look at this, right? How did we call the bottom at 10, right? Beyond the harmonic that we had drawn and all the other shit that we were watching, right? Watch this. Take a box. Look at where Keith bought, right? This is where Keith bought the second time when he was in Congress, right? And then look at where the stock kind of paused and hesitated before the short squeeze. So if we just draw a box roughly around that area of price action, right? And then we just drag it across. Do you think it's coincidence that we bought that and then sold that? Fuck you, that's luck or coincidence. That's literally common sense. And all we did is draw a fucking green box. What am I, fucking Nostradamus because I draw a fucking green box? There's just nothing that makes more sense than those things for you guys to try to work on your entries and exits. And I say this because, like, you could have said, right, when we were trading GameStop, you could have said at any moment, okay, it's in that green box. I'm going to even buy the top of the green box. Okay, you bought the top of the green box. No problem. Now, TradingView, for whatever reason, gives you a minus gazillion fucking stop loss, which makes literally no sense. But anyways, so with this box that we have now taken an entry right at the top of the green, right? Shouldn't do that, but we did it anyways, right? Now we have a clearly identified risk. The risk is that wick low, right? You want to put it just slightly underneath of it? You can do that too, right? I think that's actually what we did. I think we gave 15% on this, right? Just as an example here, right? That's the trade. Was your entry perfect? No. But did you make fucking 60+%? Fuck yeah, you did. And you knew how to time that entry better. How did you know to time that entry better? You drew the box, dum-dum. You buy the lowest of side of that box as you can, because then watch what happens here. The lower that you get that entry, watch my stop loss now, because there's the wick, right? So look at what I can do with this now. Now, all of a sudden, my stop loss went from being fucking 15% to 5%. Now look at the risk reward. It's double. And all you did was just have fucking patience. That's it. It just ain't that deep. So what I want you guys to do, right? Okay, chat, while I'm doing this live right now, somebody give me a random ticker. Don't give me something that we've talked about. Give me a random ticker that we've rarely looked at. And yes, this is being recorded. Give me a random ticker. Okay, the first one I saw was Nvidia. No, that's great. Perfect. Okay, so watch, chat. Listen, get rid of the harmonic, get rid of the drawings, get rid of the Fibonacci's, I'm getting rid of all of it, okay? And I'm going to show you, right? You can even see I've already gotten a box drawn on there, right? Okay, watch. Check this out. These are the highs that Nvidia is currently at, right? These are the highs that we've been at for this year. There is no higher highs than this. This is the highest Nvidia's ever been, right? So what can we do to draw support and resistance, right? Look, simple. These two highs were resistance before, back over here when it was resistance as well. Then we gapped above it and then it just ripped to a new high. Easy. We're going to draw a fucking box around that bit of price action. Look at where the stock goes into on the market crash Mondays. A slight wick below and an explosion back up. Easy fucking trading, right? But now look at this. Okay, you guys have now identified another key area of support, because we've seen the stock come back here twice and bounce off this range. So what can we do? We can just take another one of these things, right? Encapsulate roughly the price action right there, right? There's another layer of support, right? And now look above, right? We've now got this yellow box. Now I think I drew this yellow because it was a golden pocket, if I remember, from this high to that low. Yeah, so that's roughly the golden pocket. So that's why I made that gold. But we've got this area that was resistance, right? And then we broke above it, support, bounce, support, bounce, support. Oh, we broke through it, resistance, dump. Oh, broke through it, support. Oh, nope. Reject, resist, reject, resist. Above it, nope. Back test, boom. So we can identify that this area here, maybe we could probably maybe just like that, maybe that's like a little bit better. And we can mark this one green now too, because price is above it. That's support, right? Okay, now the best one. Right? This is easy, right? We're going to take a box. We're going to encapsulate it from roughly these two highs here, right? And we're going to go to those lows right there and just drag that across. And then we're going to make it red because we think that that's resistance, right? We think that's resistance. So really fucking easy. Now, I'm not, please, this is not a trade suggestion. I'm not telling you to do anything with this. This is purely educational content. If I was looking at shorting Nvidia, common sense would dictate, right, that I would look at a short position where the stock is roughly now, or maybe even as high to that red box as I could get, with my stop loss above that prior high, right? Let's see what the percentage is, right? So that's 5%. That's pretty good. Maybe we could give us a little bit more, right? Maybe we'll give us like 7%, right? So then we've got our stop loss set like that, and then we know the exit is at support. Now, is this trade worthy of taking? Look at your risk reward. It's less than a 2-to-1. That is shit. So what can you do to get a better risk reward trade? Well, you can try and time a better entry. But then you're talking about the stock being right near a high that it could potentially explode past, and then you're just going to get ass blasted. That's part of the gamble that you take with shorting things that are right at resistance. That's why we mark these boxes. So Nvidia, that's an example right there of how you can mark these. And look, we can use old price action as well, right? Let's go back to the market retracements, right? Let's go back to back here. Right? How did people find a way to make a shitload of money on Nvidia? Right? How did people find a way to call these bottoms on Nvidia and do all this and blah, 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 right? Okay, so listen, when Nvidia was here, that was the all-time high. Okay, so just forget this for now, right? The thing we want to focus on now is when the stock was making a retracement. How did traders find an opportunity to long the shit out of this thing and make a bazillion fucking dollars? Look, encapsulate support. Right? This might be a little bit of a bigger box. Okay, it's fine. That is support. It was support here for that move, support here for that move, support for this, support for that. So when price tumbled all the way back down there, you better believe that the motherfuckers were drawing little boxes and saying, okay, I'm going to buy this thing. And if it wicks underneath of it, I'm still good. Because guess what that was on the daily, folks? Those candles that hit that green box, look at this on the weekly. That candle, right? That candle, right, goes underneath it, and then it doesn't have another weekly candle that opens and closes underneath support. So that support remains. So when the stock opens here on this week and starts to run, traders will then enter a position with a clear defined risk and reward. The risk is the low because they're making a bet that is the wick into the stop loss hunting that sends the stock up via liquidity purposes. So when it bounces at support, they will then take that entry, even though they've already missed, right? They've already missed fucking 6%. Oh no. Right? Oh, they've already missed, 10%. Oh no. They've got the confirmation they need to have a clear, defined risk and reward. The risk is the low of 11%. The reward is prior highs of 157. And any motherfucker that was lucky enough to buy that thing back down there at the bottom of the market retracement ended up making a bazillion fucking dollars and one of the best fucking trades of this century. And all it was is just drawing the dumb idiot fucking green boxes. That's it, baby. That's it. Simplify your system. When the stock gets to resistance, does it have bearish divergence? Does it have reason for failure? When Tesla hit this level, you had multiple touches of bearish divergence forming off of these highs. That was 2 touches right there, from that high to that high to that high. At the resistance, with a harmonic, at the box. Easy. That's free money. Even if it doesn't work out, I'm going to get stopped out for a very minimal loss. It's not going to break my bank account. It is the risk that we take with trading these stocks. But when you've got a clear, defined setup, right? Look at Snowflake. Snowflake is probably one of the best, most recent examples. Look at Snowflake, right? Snowflake was fucking easy. How did we make it fucking easy? Bros, look. We literally just drew a fucking box. This was the last all-time low supportive lows. So all we got to do is basically just take a rough estimated box, right? Draw that shit across and look. Look. And the thesis on this, on something like Snowflake, is so simple. It's so simple, right, guys? Because check it out. Listen carefully. If you take a chance on buying at support, you are essentially saying, bro, I don't think the shorts have the ability to slam price through support. This is a big stock. This is a big company. If you don't think the shorts have the ability to do so, every time they test those lows, you are looking at an opportunity of accumulating. Because you're betting that the bulls are going to jump in alongside with you to propel it off of support. And every time you take these trades, you have clear defined risk. Whether it's 5%, 10%, 20%, it's up to you. But draw boxes, make life easy. None of you should care how people view you. Well, he draw boxes around thing. What is he, Nostradamus? Shut the fuck, like, who cares? Who cares? Bro, I'm trying to make money. I don't care about people's personal opinions of me on fucking Twitter or what they think about my... who cares? Make money. Right? But make your entries and exits as simple as possible. And as simple as possible is just literally, guys, let me pick. I'll just type in random letters. I'll type in random letters. We're going to pick a random stock. Okay. And I'll show you. Okay. Let's, F. Let's start with F. And then let's do H. Let's see if anything comes up. No, let's try FT. Okay, Franklin Universal Trust. Perfect. Okay, look here, easy. Look. Look, we'll just draw boxes on this thing, right? We'll just draw boxes on this and make it super fucking easy, right? Look at this. Okay, first immediate low that we can notice is right here, right? And so we'll just take a rough box around that kind of area, just draw that across, and look at it. Look at how many times the thing even wicked into that and gave you opportunities. Look at this. The first time you ever tested that box, that gave you a 90% move. Next time you wicked below it, but we'll just say you buy it every time it gets there, 72%. The next time it got to that very same box, also wicked slightly underneath it, no big deal, 48% gain. Next time it did that, another big gain. Next time it did that, oh no, market crash. Oh, but then we recovered after the market crash. Tested it again, bye-bye. Tested it again, bye-bye. Tested it again, bye-bye. Tested it again, bye-bye. Right, and now let's draw the resistance boxes, right? Well, we can see this resistance. This is pretty clear, so we draw that across. Right, so we haven't been there recently, so that's okay. Right, the next one that we can draw, it looks like this was resistance right here before this kind of pushed down, like the 01-02 crash, right? So kind of encapsulate that price action, right? And draw, ooh, look at that, right? Ooh, pretty shiny red box showing us resistance points. Ooh, right? And then if we were like, oh, I want to take a trade on this thing. I'm like thinking about a trade on this thing. How could I do that? Well, I can clearly see that this high, these highs here are all kind of connected. So I'll encapsulate that. Right, dragged. Oh no, the stock is at resistance. Ooh. And then I'm going to zoom into the daily time frame. I'm going to say, is there any divergences or anything? Ooh. Multiple touches of bearish divergence. Oh no. And then what happens if the daily RSI loses center? Oh, that thing's definitely going to go down. Oh yeah, bros. That thing's definitely going to go down. That's easy. Right? If it holds on to the center line, maybe it can hold on to this box and then maybe we can turn it green. Maybe we can push off it and then use it as support. But as of right now, bros, it's not looking good because you're at the box. You've got a shitty, super extra weird death cross. And you've got the RSI looking like a turd. All it needs now is if the RSI lost the center, this thing is definitely going to dump and it's definitely going to test those moving averages. But you see how you can just make trading so simple? It doesn't need to be complex or complicated. You just identify the easiest fucking trades to make. Sometimes the easiest trades to make are just simple support and resistance. You don't need to complicate it with divergences and harmonics and MACD and fucking whatever else, right? Keep it simple, stupid. So chat, that is it for the first lesson on better entries and exits. And we will have a follow-up to this video. So thank you for tuning in.